From the University of Westminster, this is the Week Ahead with Dave Coker.
Hello guys, it's Sunday, February 28th, the last day of February. This week we're moving into March. Time really flies, doesn't it? My name's Dave Coker. This is, of course, the Week Ahead. Let's see what's going on over the next 5 trading days. Try to give you some idea of information that's coming your way, things you should pay attention to make sure you're ready when news moves the market. So key events. We've got this battle going on between share prices, stocks, and treasury yields, which are rising. Last week we saw a sell-off in treasuries. So of course, because there's a sell-off, the yields tend to rise. Risk-free assets more attractive, stocks less attractive relatively. So we see money moving out of stocks into treasuries. And it's also rippling into the commodity markets. We'll talk more about that later on. We've got the February jobs report coming out, lots of data there. Fed speak, there's no fewer than 6 Fed governors speaking this week. They're trying to get ahead of events, ahead of news. We'll pay attention, I'll let you know who to listen to and when on the daily. We got the OPEC meeting coming up, I believe that's Tuesday. Some 13 nations getting together to talk about oil. UK budget and Eurozone data. Rishi Sunak is going to whack us in the UK with increased taxes pretty much across the board. That's the rumor. And we've got Eurozone data. We're getting information on unemployment, GDP, inflation, and PMI information in the Eurozone. So that'll be interesting to see what happens. All right, in taking a look at the S&P 500, here I've got the year-to-date performance. And once again, these wonderful heat maps produced by FinViz give you graphically an overview of what's going on in the market now. So we can see here, guys, remember the way you read it, bright red to bright green, bright red meaning drops, bright green meaning increases, and everything in between. We can see when we look at the year-to-date data, companies aren't doing super well. Some of the tech companies, take a look at Amazon, down some 5%, Apple down 8.6%, Microsoft paradoxically is up, but their cloud business is booming. So no surprise there. They're hitting it really, really well these days. Down, take a look on the left-hand side, down, lower left quadrant, we can see banks. Under financial sector, banks diversified. Now, guys, remember, as the yield curve steepens, and we talked about that, we discussed that in talking about finance, as the yield curve steepens, as the spread increases between long-term and short-term rates, banks become more attractive in terms of destinations for capital, because the lending business will become more profitable as the spread widens. So JP Morgan up some 15.82, Bank of America up almost 15% on its own. Underneath it, we see Berkshire Hathaway up some 3.73%. And Buffett's letter to shareholders came out yesterday. So go over to his website and check that out. It's always a good read. We can take a look at PEs. And even though we had a sell-off last week, we can see price to earnings have not really mean reverted at all. Check this out. Amazon. Price to earnings, upper right-hand corner, consumer cyclical. Price to earnings ratio for Amazon, 74.08. Auto manufacturing, Tesla, 1,086. That's really up there. Microsoft and Apple, still north of 30. Very much a surprise. Down in the lower left quadrant, let's look again at financials. We'll look at banks diversified. And there's JP Morgan and Bank of America. Really interesting, guys, because their PEs are not outrageous. Remember, the long-run average PE for the U.S. markets, roughly 17. So JP Morgan and Bank of America both seem fairly well priced, and especially considering we're coming into an economic environment which should favor them. Let's look at the daily. So on Monday, March 1st, FOMC member Williams is speaking. At 1000 hours, we have the Institute of Supply, Management, Manufacturing, Employment. Prior was 52.6. We don't have a forecast on that. We're trying to see if employment's increasing in the manufacturing sector. Very important part of the U.S. economy. At 1000 hours also, we have ISM manufacturing PMI. We're looking at the Purchasing Managers Index. And I love to look at this simple data, guys, because it's very easy to tell based upon the reading. 50 means it's flat. Less than 50 means it's contracting. They're placing less new orders. And above 60, or above 50, I should say, means that they're placing more new orders, and 61.1 was the prior. We'll see what the forecast is. Tuesday, March 2nd, we've got the IBD TIPP. That's the Investors Business Daily IBD. Technometrica Institute of Policy and Politics, TIPP. As I said, it's easier to call it IBD, TIPP, economic optimism. And what we're trying to do is we're taking a look at the consumer, asking them over the next 6 months, do they see the economy getting better or not? Same simple metric, 50's flat, below 50 means it's negative view, and above 50 means an increasing optimistic view. Prior was 51.9. We don't have an idea about the forecast, but we'll see it. 1,300 hours, we got FOMC member Williams speaking, followed up at 1,400 hours by FOMC member Daly speaking. Wednesday, March 3rd, the OPEC meeting. As I mentioned, guys, 13 nations coming together, virtually, of course, going to talk about their business. It'll be fascinating to see if they continue to restrict the supply of oil in order to drive the price up. The market has chatter about $100 a barrel oil by the end of the year. A lot of that is driven by what we call the reflation trade. So this idea that the consumer, that many people are sitting on record amount of savings, and in this environment, when the economy booms back, they're going to be doing a lot of things that they can't do now. Travel, driving around a lot, getting out and about. So demand for oil should rocket up. And of course, we've seen some actions by the Biden administration with Keystone and other production facilities in the states that have shut down, curtailed supply on that side. At 8:15, ADP, non-farm payroll, non-farm employment change for February. ADP is the automatic data processing. It's a private company. I love to look at both government and private data for the same metrics. They process payrolls. They're the largest payroll processor in the States. And what they're doing is they're looking at the payroll data for roughly 400,000 companies. And they'll tell us whether there's been an increase or a decrease. Last time the forecast came in, last time prior was 174. It's forecast to come in at 168. And at 1000 hours, we got the ISM non-manufacturing PMI. So once again, we're looking at PMI, the Purchasing Managers Index, but we're looking in the non-manufacturing sector. Same approach. Prior was 58.7, forecast 58.7. In other words, it's flat on the week. Thursday, March 4th, we got challenger job cuts coming in for February. And these are fascinating because it's released by a firm called Challenger Gray and Christmas. And what they're doing is they're looking at the number of jobs that have been cut. And this is wonderful because when jobs are cut, they're removed. It's not the same as a layoff, guys. Layoff, the job is there. You just got to wait to be called back. These are jobs that are gone. Prior was 79.552. We don't have a forecast. At 0830 hours, we have continuing jobless claims in the United States. Prior was, and make sure you get the units right, prior was 4,419,000. So we're roughly talking 4.4 million. Forecast to come in at 4.4 million as well. A very dim time, or grim time, I should say, in the United States. These jobless numbers are absolutely amazing. Friday, March 5th, starting out early, bright and early, 0900 hours, FOMC member Williams is speaking. At 1000 hours, ISM manufacturing employment number. We're looking at for February. Prior was 52.6. We don't have a forecast. At 1000 hours, we got ISM manufacturing new orders index. Essentially what we're doing is we're taking a look to see how many new orders have been placed. And as usual, it reads 50 is flat. Below 50 means contraction. Above 50 means expansion. In other words, increased number of new orders. Prior was 61.1. We don't have a forecast on it. All right, guys, that's it for the week ahead. Thank you for your time. I hope you have a safe and profitable week. We're all going to make money. Just keep your eyes open. Pay attention to the news. Know your assets very well. There's absolutely no reason to make money. As Proctor says, with volatility comes opportunity. And now you've got an idea of some of the news and events that will drive volatility over the week ahead. Thanks for your time, guys. Take care.